For years, Nvidia was not just a supplier, but the very backbone of China's rapidly growing AI industry. Its presence could be felt in every corner of the tech ecosystem, from the bustling offices of major corporations to the energetic workspaces of ambitious startups. Nvidia's technology powered the digital transformation of an entire nation, enabling breakthroughs that would have been impossible just a decade earlier. Whether it was massive data centers crunching petabytes of information, or small startups experimenting with the latest AI algorithms, Nvidia's GPUs were at the heart of it all. These powerful chips became the silent engines driving innovation, accelerating everything from facial recognition systems to natural language processing, and even powering the smart city infrastructure that was beginning to define urban China. The secret to Nvidia's dominance lay in its cutting-edge GPUs, which were essential for training the most complex and demanding AI models. Researchers and engineers across China relied on Nvidia hardware to push the boundaries of what artificial intelligence could achieve. This technological edge made Nvidia not just a market leader, but a critical enabler of China's AI ambitions. China's bold ambition to become the world leader in artificial intelligence by 2030 only intensified the demand for Nvidia's technology. Government initiatives and massive investments poured into the sector, fueling a gold rush for AI talent and hardware. Every major tech company, research institute, and even government agency wanted access to Nvidia's latest chips. By the early 2020s, Nvidia's grip on the Chinese AI chip market was nearly absolute. The company commanded over 90% of the market share, leaving competitors scrambling to catch up. This dominance translated into billions of dollars in revenue and made Nvidia a household name among China's tech elite. But Nvidia's influence went beyond just hardware. Chinese companies were deeply integrated with Nvidia's proprietary CUDA platform, a powerful software ecosystem that allowed developers to unlock the full potential of their GPUs. This deep integration made switching to alternative solutions both technically challenging and financially costly, further cementing Nvidia's position at the center of China's AI revolution. With each new product launch, Nvidia's dominance seemed only to grow stronger. The unveiling of every new GPU was met with anticipation and excitement as Chinese companies raced to adopt the latest technology and stay ahead in the global AI race. Nvidia's reputation for innovation and reliability made it the go-to choice for anyone serious about artificial intelligence. Yet, beneath the surface, there were growing concerns. Few in the industry anticipated the political storm that was about to challenge Nvidia's reign. As tensions between the United States and China escalated, the tech world braced for impact, unsure of what the future would hold for this crucial partnership. The stage was set for a conflict that would not only test Nvidia's dominance, but also reshape the entire global technology landscape. The coming years would see a alignments shift, and new players emerge, and the very foundations of the AI industry put to the test. In the early 2020s, the United States found itself at a crossroads, watching China's rapid technological ascent with growing unease. As Chinese tech companies expanded their global reach, Washington began to see this rise not just as economic competition, but as a strategic threat to national security. The US government grew increasingly concerned about the concept of military-civil fusion, a Chinese policy that encouraged the seamless integration of civilian technology, advancements into military applications. This approach meant that innovations in artificial intelligence, semiconductors, and advanced computing could quickly be repurposed for military use, blurring the lines between commercial progress and defense capabilities. For US officials, this strategy was deeply alarming. It suggested that every breakthrough in China's tech sector could potentially strengthen its military power. The traditional boundaries separating business from defense were dissolving, making it difficult to distinguish between harmless commercial products and those that could tip the balance in future conflicts. As a result, American policymakers began to scrutinize every aspect of the technology supply chain, from research labs to manufacturing plants, searching for vulnerabilities that could be exploited by rival powers. In response to these mounting concerns, the US government took decisive action. It imposed a series of export controls designed to restrict China's access to the most advanced technologies, particularly in the fields of semiconductors and artificial intelligence. These measures aim to prevent sensitive American innovations from fueling China's military modernization and to protect the US lead in critical tech sectors. The primary goal was clear: slow down China's ability to develop next-generation military systems by cutting off its supply of high-performance AI chips and advanced processors. By limiting access to these crucial components, Washington hoped to maintain a technological edge and safeguard its own national security interests. The turning point came in October 2022 when the US government announced a sweeping ban on the sale of Nvidia's most powerful graphics processing units, GPUs, to China. These chips are essential for training advanced AI models and powering supercomputers, making them a critical resource for both commercial and military applications. The ban sent shockwaves through the global tech industry, signaling a new era of competition and confrontation. This bold move marked the beginning of what many now call the chip war, a high-stakes struggle for dominance in the technologies that will shape the future. It also signaled the end of an era of relatively free and open technology trade between the world's two largest economies. Suddenly, companies and governments alike had to navigate a landscape where political decisions could upend global supply chains overnight. For Nvidia, the consequences were immediate and dramatic. The company lost access to a massive and lucrative market, as billions of dollars in potential sales vanished almost overnight. Investors and analysts scrambled to assess the fallout, while tech executives around the world braced for further disruptions. The rules of global business had changed, and the world was left to grapple with the new reality of technological rivalry and economic uncertainty. The story of Nvidia and US-China tech restrictions is a tale of rapid adaptation and escalating tension. In 2022, when the US government first imposed export controls on advanced semiconductor technology, Nvidia found itself at a crossroads. The company, known for its cutting-edge graphics processing units, or GPUs, was suddenly unable to sell its most powerful chips to one of its largest markets, China. But Nvidia didn't waste any time. The company's engineers and executives quickly regrouped, brainstorming ways to comply with the new regulations while still maintaining a foothold in the lucrative Chinese market. Their solution was to create less powerful versions of their flagship chips, specifically tailored for China. These new chips were designed to fall just below the performance thresholds set by US law, allowing Nvidia to continue doing business without violating export controls. It was a clever workaround that demonstrated both technical ingenuity and business savvy. The result was the A800 and H800 GPUs. These graphics cards were engineered to comply with US restrictions, but still offered enough power to meet the needs of Chinese data centers and AI developers. For a time, it seemed like Nvidia had found a sustainable path forward, balancing regulatory compliance with market demand. However, officials in Washington soon realized that these modified chips could still be used in advanced computing applications, including supercomputers and artificial intelligence research. Concerned that China might gain a technological edge, US policymakers saw Nvidia's workaround as a loophole that needed to be closed. In October 2023, the US government responded with even stricter export controls. These new rules specifically targeted the A800 and H800 chips, effectively banning their sale to China and closing the loophole Nvidia had relied on. The move sent shockwaves through the tech industry as companies scrambled to reassess their strategies. For Nvidia, the impact was immediate and severe. The company's ability to sell high-performance products in China was drastically reduced, threatening a significant portion of its revenue and future growth prospects. Executives faced tough questions about how to navigate this new landscape. The US government made it clear. Cutting off China's access to advanced AI technology was a top priority, even if it meant financial pain for American companies like Nvidia. This ongoing battle over technology and national security continues to shape the global semiconductor industry, with far-reaching consequences for innovation, competition, and international relations. The 2023 rules devastated Nvidia's China operations, risking billions in revenue. Major Chinese tech firms canceled orders, unable to buy the necessary hardware. Nvidia's revenue from China plummeted as the market for its chips vanished. Attempts to design compliant, less powerful chips failed to attract interest. By mid-2024, Nvidia's dominance in China's AI chip sector was over. The US had effectively forced Nvidia out of one of the world's largest markets. The US restrictions spurred China to pursue self-reliance in AI technology. Beijing launched initiatives to build a domestic semiconductor industry. State support nurtured new Chinese chip companies, aiming to compete globally. Despite initial setbacks, China focused on long-term gains, fostering a homegrown tech ecosystem. Huawei emerged as a key player, filling the void left by Nvidia. Its Ascend chips, though initially less powerful, gained traction in China. Huawei developed its own software ecosystem to rival Nvidia's CUDA. By 2025, Huawei was capturing market share, becoming a new standard in China. US sanctions inadvertently accelerated Huawei's rise as a formidable competitor. The chip war caused collateral damage, affecting both US and Chinese firms. US companies lost revenue and faced reputational damage as reliable partners. China's AI progress slowed, but the shift to domestic suppliers rewired its tech ecosystem. The US aimed to isolate China's tech industry, but also isolated its own companies. Nvidia's exit from China highlights the risks of geopolitical tech conflicts. The chip war replaced global integration with fragmentation and rivalry. US dominance in semiconductors became a double-edged sword, spurring China's independence. China's resilience under pressure led to a bifurcated world with parallel tech ecosystems. The saga marks the end of globalization, ushering in tech nationalism and decoupling. Policymakers must navigate this new reality where tech is as crucial as geopolitics.